Hello there, you crypto bulls and crypto bears. Welcome back to another episode of TA with MK. My name is McKay, and in today's episode, we're just going to go over some examples of lower lows inside of rising wedges, or when rising channels or wedges break lower. Just the emphasis or the weight that a lower low should hold in your mind, at least as traders, and the power that they can have as far as, statistically speaking, sending price action in the other direction from what the trend was. And the reason this is important right now is because Bitcoin just recently broke lower out of a rising, wedge or channel that it's been in for about 2 months. So we're going to talk about that in today's video, and if that sounds interesting to you, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. All right, so we're just going to go over a few examples on the Bitcoin daily chart. This is the Bitstamp chart. And so we're going to start with some examples going back as far as this one is. First one I'm going to give is March and April of 2018. And we're just going to kind of point out or emphasize, I guess, the relevance or how important a lower low can be, and as it relates especially to the examples I give in this video, which are going to be, primarily rising channels or wedges, right? And so we're going to pull out our little tool here and just kind of show you. So this wedge, which this one's not the best example, but we'll go ahead and still start with it. You have your swing low within the wedge, high, low, high, low, higher high. So you were still in an uptrend, but then you put in a lower low. So this was the last low inside the wedge. And even if you just ignore the wedge, just price action, obviously, as far as swings go, high, low, higher, low, higher high, higher low, higher high, but lower low. So this was your first caution, I guess you could say, and then Bitcoin did rally at that point, up about 8 or 9 more percent, we'll say a little over 8%, before ultimately putting in a lower high right here and then rolling over, right? So that's our first example. We'll pull this across a little bit till we find our next one. Here we go. We got a couple back-to-back ones. Now this one's not perfect either, but since that first one wasn't, I thought I'd kind of show on this one. So this one, you're not nearly as steep, obviously, but you have your, your swing high, low, a little bit higher high, slightly higher low, and then you could draw this trend line a couple of different ways. It could have actually been drawn like this too. So you had essentially a break and a retest of the top of this wedge. Now, statistically speaking, that broke against the odds. A rising channel in this case, or a wedge, those have a 68% or about a 70% chance of breaking to the downside at some point, and the high percentage of the time they do. In this one's case, it broke out, retested the top side of this and continued to push higher. Key is the entire time it was in this trend, it never broke structure, right? And that's kind of, as we go along these examples, that is the key, is that you have a structure being built anytime you're in an uptrend where you're putting in a series of higher highs and higher lows, and once that structure breaks, that's when you kind of have your caution flag go up, right? And so here in this next example, I've put a yellow box around this because this is one that's kind of similar, the closest to kind of what we're dealing with right now, where it did break lower out of the wedge, but ultimately it pushed higher. And the main reason that you could say that it did is here you had your high, and you kind of had this low. Now there was this wick down here, but ultimately this is your low, and you pushed up here, high. But this little double bottom that it put in here, it's still the same low as back here, right? This little low that it put right here. So it didn't really break structure. If you'd been trading this based on this wedge at the time, which really wasn't a great, valid pattern per se, but it does have a few touches on both sides. So something that I'm sure people were talking about at the time back in, I guess this is May of 2019. But ultimately, it did break lower and bearish retest, but it happened right at support. It found support, and on its last swing low, which was back here, it was the same level. So had price action gone a little bit lower, that would have been the caution flag, and then, what you would have expected to follow that, or at least statistically speaking, would have been a lower high, and then for it to just continue to go down. So that's kind of where that one's a little bit of an outlier, but as you see, the key was it never broke structure, right? So now we're going to kind of zoom out and see if we can find some of our other examples here real quick. Okay, here's another one. This is another one of those ones that's a little steeper, but you can see, now this is price action from December of 2019 through February of 2020. You can see you have your swing high, swing low, swing high, higher high, higher low, higher high, higher low, higher high, You know, this is basically the same low as back here, so, you know, no caution yet. But as soon as this rolled over and put this in, this was your caution flag. This is a lower low than the previous low inside the wedge, which you could argue would either be this one or this one, really. Really, you know, you have a little swing right here, so I would say this was it. But either way, it was lower, right? Caution flag went up. You know, this was your sign that you probably should be taking profits or at least moving stop losses up if you were in any trades at the time. Price action did, just similar to that previous example from earlier, rallied another about 8.5% before putting in its lower high. And then this one broke, you know, to the downside, or price action dumped further, you could say. Here's another example. This is from 2020, March through April. Now this is one that's kind of similar to the other example I gave where it broke lower out of the wedge, but ultimately price action bounced. And then for similar reasons, because you have this low, you know, high, low. This is kind of the same high, so you might have, you know, a little bit of a caution right there. You might have been looking for a potential double top or even a slightly higher low. But when it came down, it put in a low at the same price, so no real caution yet. Then it pushed up and put a higher high in, so that was good. And then when it broke lower out of this wedge, you know, and it even on lower time frames, it even bearishly retested it. A lot of people probably thought, hey, we should go short. But the key is the last swing low, which was back here, which I marked by this green arrow, this was still a higher low. You know, it was a higher low. And so, you know, maybe you would have wanted to short had this broke this level. You know, if this would have broke down here and bearish retested there, that would have been your short signal, not this. This would have still been somewhat of a caution because it did break lower out of a larger pattern on the daily. But as far as swings go, which is what we're focused on in this video, it still put in a higher low, right? And that's kind of the key that I want you to gather out of all these examples, is just the importance, I guess, of a lower low. So, you know, here's another example here from price action from July of 2020 through August of 2020. Again, you have your swing high, you know, low, same high, but still a higher low, higher high. But then right here is where you put in a lower low than back here. Now it's almost the same price, so it wouldn't have been one that necessarily would have had the giant red flag go up, but you would have definitely been paying attention, especially as this came up here, found resistance along the same area that had been resistance once, twice. You would probably look back later on this price action here as being what's known as a bull trap, where it broke above resistance but wasn't able to hold it. And then ultimately it put in a lower high. So this example is not quite fitting along with the other ones because we're focused more on the lower lows in this one. But I still wanted to just share that example as to, you know, how I would have been thinking at the time if I'd have been in trades as far as that pattern coming up. And then let's see, I think I have one more example to give. This is a much larger pattern that covered a bigger span period of time, but still kind of the same concept. You can see here that price action came in, put in a high, a low, higher low, higher high, but here's your big caution flag. And this was actually from last year in the first big April dump, right? The April/May dump. This was your caution red flag that, hey, we need to look to get out of positions on the potential lower high to follow. And sure enough, had you been tracking this trend line that it broke lower out of and put the lower low in, that ended up being the exact spot that it found resistance twice here. Basically put in a little double top below that previous trend line of support. Ultimately put in a lower high and dump all right? So I mean, you can see the pattern or the similarities between all of these rising channels and what happens anytime there's a lower low put in. Again, swing high, low, higher low, higher high, boom, caution, dump, right? Another one, high, higher low, higher high, boom, caution, especially down here was really the caution. This one was very similar again to where you may have expected it to potentially bounce, and it started to, but then when it rolled over and put this one in, boom, price action again, rallies around, you know, say about 10%, 10 to 11%, about 11%. And then again, like all of the ones that came before it, dump. All right, and then I think that brings us to current price action. Yep, and this is where you have a bit of hopium that this is a little bit different, because you can draw this quite a couple different ways. You could say that this is the top trend line and this is the bottom trend line, you know, because you do have these touches here and almost right here, depending on how you draw it. And so we're bouncing on that area right now, which is also a level of price level support at about 20,800 or the 21,000 level. And so, at this point, we're still holding structure as far as that goes. But as far as this little rising wedge that was within the larger rising channel, you had a high, a higher low, a higher high, higher low, higher high. And this is kind of your first caution. Again, the reason why I wouldn't go completely short just yet is that at this point, if you take the larger swings that are within here, it is still a higher low than this one back here, but that would mean you'd have to consider this entire thing one swing, and clearly it's not. You have swing, 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 So the way I look at this is I actually started shorting once we put in a lower low than this area. Let me kind of clear some of this back up again so you can see what I'm saying. So the reason why I've been talking about shorts recently, or at least the BNB short that I mentioned in both of my last two videos, is because this is what I was tracking. It was essentially that if we had this high, this higher low, this higher high, and as soon as we put in a lower low than this, to me, so right at this point when this level got broken at about 22,500, that to me was your short signal. Now on lower time frames, of course, I was zoomed in and I was watching for a bearish retest of that level, but that was the short signal to me. The first short signal really was just losing this trend line of support that we'd been holding us up since mid-July. But the next short signal was putting in, which is what we're focused on in this video, was this lower low. So again, as far as the bigger rising channel, if I would feel a lot more confident holding my shorts midterm if we were to lose this support and then trend lower. And then the last chart that I wanted to go over in a second was just the one that I mentioned from yesterday, which was the the measured move that we're looking for right now from this breakdown of the wedge. All right, so I showed you all that just to come full circle back around to this daily chart we were speaking about yesterday, this rising channel that we broke lower out of. And I mentioned in yesterday's video that I came up with this zone, basically, that's the measured move, which comprises of my conservative target and my aggressive target. And that ranges between about 18,600 and 19,500. Now, the reason why I wanted to finish off with this is you did see some similarities along the way as I was giving those examples of between 8 and 10% bounces that followed the lower low before ultimately putting in the lower high and then dumping even further. So if we are to reach this measured move, I wouldn't expect it to happen all in one impulse wave. That is, unless, there's some sort of a little black swan event, or if stocks, on Monday just open up and dump, then maybe this would reach that pretty quick. However, let's just make the assumption that it's not going to do it all in one wave. Well, what would something like an 8 or 10% bounce from this low that we just had at 19,000 or 20,800 look like? Well, about 8.5% would put us up to about 22,500. If we went a little higher, maybe even all the way up to about a 10 or 11%, that could see us go as high as maybe just over 23,000. And there's some confluence at those areas as far as, if we get a little relief rally, as you want to call it, that there would be resistance in those areas. Also, the underside of this previous rising channel that we broke lower of would be in this same kind of area right here as well. So if we do get some sort of a little rally over the next 24 to 48 hours, maybe even to the first day or two of next week, that would be to me the short-term ceiling, at least assuming that this lower low does hold the weight I expect it to. And that's where I would expect to see something like a lower high. So we had this high, this would be a lower high, and ultimately then maybe we work our way back down over the next week or two to hit eventually this measured move, right? And then maybe get some sort of a little falling wedge at that point, and then we would just start looking for long ideas after that. But I just want to kind of give you guys that update, and just keep in mind the importance or the weight that a lower low should hold, as far as your perspective on these higher time frames. And that's going to wrap it up for me today. I hope you guys are enjoying your weekend so far, and I hope that you continue to enjoy the rest of your weekend. And as always, if you're enjoying the content, please remember to like and subscribe. We'll catch you tomorrow. It's TA.